All right. Hello, everyone. This is Stop Losing, Start Trading. Today I'm on my own, so I'm doing this solo. So we'll go over the trades that we've been discussing, me and Rosalie. The goal of this live stream is to teach Rosalie and also everyone listening how to trade options, whether it's on Panoptic or anywhere else. You just have to understand the basics, understand the mechanisms, and it's not rocket science. It's actually fairly straightforward once you get it. So that my goal is to transmit that knowledge to all of you guys, so that you have a better understanding of how to trade options. Without further ado, typically we have a little bit of back and forth. Today might be a bit shortened because it's only me and it's also President's Day, so maybe not all of you are here, but I'll try to have this be something of reference if you want to listen to this async or some other day. One thing that's actually pretty cool is that today I'm going to talk about some trades, and then the title is If I Did It Arc. I'll discuss the trades as if it were me. I don't know who did those trades. Maybe it's going to be me or someone else, but we'll go over them so that we won't necessarily look at the intern account, but rather look at our main, the main traders that I want to look at. First and foremost, a little bit of self-promotion. If you're at ETH Denver this year, come to our event. This is on Friday afternoon. We want to make it short, want to make it fun. We have one panel, a bunch of folks who have people discussing the market making and the inner workings of DeFi protocols and the relationship with market makers. We also have a special guest. Very happy about Tom Sosnoff, who's a again great educator in the field of options in the traditional finance world. I want to have people come in and also learn about. Oops, there we go. Learn about options in DeFi and in the options world. Again, Tom Sosnoff will be there. Folks from many different protocols who may be aware and know. Just go on that link. Maybe I'll post this. Let's go, and then you can actually join. It's going to be on YouTube. Sorry about that, but there we go. All right, next one is the market. Again, I'll try to be a bit brief because it's actually pretty mild. If you look at the activity over the past few days, it's the weekend, but also President's Day. There was a spike this morning. It's going down. It's actually ETH price is steadily moving back and forth. People were kind of crazy on Twitter about the ratio changing. So BTC has not seen that peak, rather a trough that helps the ratio. But overall, it's fairly mild. If you look at the 7 days, it's been range bound. Nothing very interesting going on. So without further ado, let's go. And again, I'll try to make it quick. Let's go over the leaderboard, some of the trades, and see what can we do and learn about trading. First and foremost, let's look at the intern account, which is Rosalie and I discussed these trades. We can now spy on the intern account to see how well they're doing. Juicy $21 return. If you remember correctly, we had several positions open in different markets. We had a big loss in the Colt token. We had a win in the Bitcoin one. Currently, we only have 2 positions open in the BTC and ETH. I'll quickly go over that. The ETH BTC one is interesting because, as you saw, the ratio did move. The ratio did go up. If you were to look at the price, there's a tiny spike here. What Rosalie's trade was initially was that she was bullish the ratio, bearish the ratio if you want bullish Bitcoin. The price has gone down, whereas it started a bit higher, it went down. This is the price we've seen. Tiny blip in terms of the price move. Her position is still in range. The other one where she purchased an option out of range, moved it closer. This one is also out of range. So even though the price has gone up in terms of the ratio and Rosalie's and the intern's account was down or bearish, there's not much changing because it's actually still in range and collecting money. So in that case, she's earning fees constantly. This is what you want to see. As long as they're in range and you have a positive premium, this is good. So that BTC ETH is fairly manageable, nothing out of the ordinary. In the ETH USDC pair, we discussed opening a new trade on Friday, and then the intern did it. We can look at the previous one that was opened 10 days ago. So whenever you look at the market, there's the buying power usage, which is one key measure. You want to see this below 50-ish%. If it's much lower, if it's much higher, you could actually be in trouble because the price could go up. Let me do it this way. Yeah, I can keep it this way. All right, so buying power is under control. Everything looks green, which is great. The one that we opened 10 days ago, this is a straddle that was at the money when we created it. It's supposed to be delta neutral, so it's not subjected to losses if there's a huge price move. What we see here is that directionally, it's pretty good. We were starting at 2600, 2670, now it's 2750. Pretty neutral. That's the beauty of delta neutral trades. Even if the price moves like 1, 10, 15%, you're at the cusp here, and then you're not subjected to capital loss. So again, I did a tweet on impermanent loss. Here, it's purely delta neutral. So you're not gaining or losing if the price goes sideways. You're only gaining when fees are accumulated. So in that case, that position earned $27 over the past 10 days. Price has been going up to the right constantly. She has one leg which has been purchased, meaning that one position earns, in that case, 12% more because people have purchased that option. So this is a very good trade in terms of setup and management. It's working for us. The break-even points are getting wider and wider every day. It's pretty good. So there's nothing more to do than just look at it go. Because even though it's a 10-day trade in, it was a monthly trade, so there's not much more we need to do. Another trade in that market was the one we opened on Friday. This one was also delta neutral, also in the monthly timescale, kind of similar to the other one, but this one was created in a bit more deliberate fashion. It's still two options: selling a put option, selling a call option. These two options will kind of offset one another in terms of risk. Here, the price is basically where we started. The two options are in range. So overall, this is working exactly the way we wanted. The key reason why we opened that second trade, which is pretty much similar, identical to the other one, except for the parameters, is that this one was built purposefully for taking advantage of these purchased strikes. So here we have a put and a call. And then let's look at the call option first. So this call option, we chose that specific strike, which is 30.53, because there's a lot of buyers in that strike. So the way this works in Panoptic is that you have a lot of liquidity that's been sold. That's the top angle here. The solid one is what's remaining because people have purchased part of that option. So even though we added a bit like, a quarter of an ETH in terms of size, people have purchased enough so that as a purchaser or buyer, they pay you more than the fees on Uniswap. In that case, this is extremely juicy. 2.6 times the fees in Uniswap. So that one leg, again, the intern or Rosalie could have created this one in Uniswap, get the exact same parameters, 2400 to 3900. But because it's being created in Panoptic and because it's in a strike that has a lot of activity, it earns 260%, or at least 160% more than Uniswap. So this is enough to cover impermanent loss, LVR, what have you. It's extremely juicy, and this is what we can see from the fees. I think people may even have bought, so it's picked up. So that one strike call option is earning 2.6x the fees in Uniswap. The other one is 1.08, so 8% more. This might have been maybe someone that closed it, but at the end of the day, both of those were optimizing for Streamia, optimizing for returns. In that specific case, extremely juicy premium of 80% more, 1.88 extra fees than Uniswap. So overall, this is another option that is working extremely well for Rosalie and the intern. It's earning fees, it's purely volatility based. In that case, it's just earning fees by just waiting. So we don't have to do anything else besides that. And again, if you remember, this is kind of net delta neutral, so as long as it stays between 3,300 and 2,300, we won't even have to look at it or manage it. So that's kind of the two trades that I wanted to highlight. Overall, typically we discuss other trades, but for now, let's look at a few other trades that have been happening in maybe the top accounts, or those that have been trading quite a bit more. So this is the Pips leaderboard. People that are participating into the Panoptic ecosystem earn points. You earn them by being a depositor, where you earn fees passively, and this gives you some points. You also earn points by selling options actively, and in that case, it's just having the ability to having the ability to sell options. The more you sell, the more points you get. Same thing with buying options. The more you buy, the more points you get. So let's look at the top trade. And if I did it, if I were the one managing that account, how would I look at this portfolio? What would I do? What would I not do? So you can spy on people, which is kind of already in the open. There's nothing more to do. So here in that specific case, we look at the position. It's actually pretty sweet in terms of return. Here, this account has a open interest balance of $1,000 in profits. This is coming mostly from the ETH USDC pair. And if we look at the different amounts of capital deployed, that account also is mostly in the ETH USDC. So $80,000 worth of capital deposited in the ETH USDC pair. They have $1,000 of open interest profits. So if they were to close all of their positions, they would earn a net $1,000. Pool utilization, which is a buying power utilization, which is a key component, is managed at 36%. This is perfect. You don't want to go above 50% and keep it below that. The reason why is that you want to be able to manage your trades, deploy more capital. If the price were to shoot up 10% overnight or go down 10% overnight, you want to be able to have capital available. In that case, 2/3 of the capital available still to trade. So in that case, this is a good position. If I did it, if I were to do a similar trade, I would do exactly the same. We can look at the positions, and okay, this one has a bunch of positions open. So 1, 2, 3, 10. So 10 positions open in that one market. We can go over some of the details. This is a bit more advanced, and this is maybe a bit more than what most of you folks may be used to. 10 positions in a single market may seem weird. I'll try to go over why, if I did it, would I do it this way, and why I think this person has 10 positions open. And this is still maybe manageable for me, maybe not for everyone, but this is kind of it doesn't seem too overwhelming if you want it. Again, given what we know about options, 10 positions is fine. But then, yes, before you can manage 10 positions, do it with 1 or 2, like we do with Rosalie, before you can do more. So here, this is all the positions opened by that account. Everything is green, which is great. So that's kind of the first thing you look at when you manage a portfolio. What's the P&L for each position? Everything is green. Every position makes money. Sometimes you have to kind of manage or nurse a position back to life. It would show up as a very red number. Here, it's all positive and green, which is great. The next one we want to look at is the delta of these positions. So the delta is, even though you have 10 positions, you can look at each position's kind of risk. You want it to be somewhat, depending on the type of trade, but you don't want it to be 0 like we see here. You don't want it to be 100%. There's weird numbers here, but you don't want to be 100% or 0 here. Most of it seems to be in the middle. So I wouldn't say there's anything to worry about in terms of management. So again, back to the first thing you do when you look at the position is to look at the raw numbers. Am I making money? How's my buying power? Second one is to scan whether there's a position that you may need to manage or that seems in trouble. The first glance of being all green is fine. Second glance, which is the delta, also seems fine. And finally, the last thing I look at, or if I did it, I would look at, is the effective spread. So the same way that the positions that we opened earlier with the Rosalie and the intern account earned 2.6x the fees, this is also what you want to see here. You want to see numbers much higher than 1. Certainly not 0. This one is probably out of range, so it's not earning anything. But if the numbers are 1x, it means you earn exactly the same as on Uniswap. If it's higher, then you have this spread multiplier. You have the market working in your advantage. You earn more than Uniswap. You are kind of statistically doing better. So this person's positions should all have extremely high and extremely high multipliers. And in that case, the 1x might be one that you would look at, but I would say that this is actually meaning that if it's 1x, you want it to be higher. So maybe you close this, redeploy, it's made a profit. Maybe you close it, but we'll have a look. So that's kind of the process. Look at the positions, look at the overview of the whole page. Eventually you get to the small little details of each page. I'll go over maybe 2 or 3 positions and maybe end it there, but that's kind of a very interesting portfolio. Lots of options. Maybe there's lots of numbers. I'll do a slight tangent. So one thing you can do as your own portfolio, or when you spy on someone, you can also look at the markets page. So from that initial window, if you click on the name here, USDC ETH, it's going to bring you to the markets page. This is when we enter a new trade. This is where we look at kind of the different values. But if you are still spying, you can see that person's collateral deposit. You can see their positions, which is the same table as before, but more importantly, you can see their whole portfolio P&L. So what that means that you take the 10 positions that are there, you combine all of them together. Some of them are big, some are small. You combine all of them together and look at the P&L chart of that one portfolio. And it's showing in that case, and you can zoom in a little bit, it's also maybe a perfect portfolio because it seems to be a delta neutral trade where they don't want to get exposed. They want this flat exposure. And the current price is quite near to the flattest part of that curve. So here, you can scroll your cursor. You can see the different values. In that specific case, the delta, meaning the exposure, and you can see where the cursor is, it's 0.32 ETH of exposure. So the P&L net, not just closing, but also kind of if we were to accrue the panoptic yield is $1,500 at the current price. The delta is 0.36. So what this means is that this person has 27 ETH of capital. They use a third of it. So about, 9 ETH of capital in play. 9 ETH is quite large. It's about kind of, again, almost 30K depending on the price, but it's quite large. But that person's sensitivity to price move is 0.3 or 0.5. So that means that even though this account controls $30,000 worth of capital, if the price were to move $1 up or down, they would not see any capital exposure. It would not move by $1. It would move by likely $0.01 because they're in this flat part. So that account is heavy on the market making side. They're using a delta neutral strategy. Everything is balanced as it should be. And if I did it, I would also do a similar thing where you want to be as flat as you can, given the price. If the price were to go up or down, you're still in the green, given that you earn fees at the same time. And if the price were to move quite a bit more, and maybe there's a huge bullish trend and it jumps to 5,000, then we can see here, the delta exposure is 15 ETH, I guess. So the out of range exposure is 15 ETH on the upside, 15 ETH-ish on the downside. So it's very, very symmetrical. It's optimized to be at the current price, but the key point is it's actually not going to be subjected to these price moves as the price move between 25 and 30K. So that whole portfolio view is very useful for managing the risk. People have like 1 sigma, 2 sigma, 3 sigma. You can do some analysis to how much you would lose given the price move of 5%, 10%, 100% even. And this positions is well balanced, quite well deployed, even though they're controlling 15 ETH, which is again about more than the 30K here, 40K. They are extremely flat. So this is good. So overall, great portfolio. I would look at a few of them. The one that stands out the most is that particular option because it has such a high effective spread of 2.2, 3.2. So in that case, you can click on the details or that window here. This looks like to be a short call. So this account sold the call option. They did it in the ETH USDC pool. That call option is in range. It's earning 3.2x the fees on Uniswap. It's not that big. It's only controlling $1,200 worth of capital, but it's optimized likely for creating these huge multipliers. If you guys also want to participate, you can also sell options to capitalize on that. Now 3x, 3.2, it's huge. 3x more than the fees on Uniswap by just selling here in that specific location as opposed to somewhere else. It's a call option, so there's definitely risk on the upside. What people do, and maybe the account does, that you can cover this. So if you have 1 ETH, or in that case 0.36 ETH in your account, you kind of net the losses out. So even though the price goes down as the price goes up, you can also cover your position and be not subjected to these losses. But at least that position earning 3x the fees on a relatively small account, already 2% in 8 days, 2% premium per week. You can multiply this by 52 if you want, but it's actually a very, very good trade, and any traders that understands this multiplier would also try to optimize this. So that one trade, very, very interesting, very, very well placed, earns 3.2x the fees, which is extremely high. And let's look at another position, which is still quite large in terms of the effective spread. And okay, this one is another one. This is a delta neutral. Yeah, maybe this one. This one is delta neutral. It is amongst the largest positions that this person has in control. Might look a lot like what we had with the intern and Rosalie's account, but this one, oh, this is interesting. So this is set up as a delta neutral trade, which is a put and a call at the same strike. This is a straddle. If you sell a straddle, normally you want to do it at the money or very close to being in the money, at the money. In this case, this position was opened almost out of range. So even though a straddle is a delta neutral trade, you can construct that trade to be bullish in nature. So in that specific case, that person sold a put that earns 1.25% more than the fees in Uniswap, sold a call that earns 14% more than the fees on Uniswap. And it is a positive delta trade until it reaches about 3,300. So that person likely, what if I did it and if I were to do the same trade, this is a bullish trade on the price of ETH. You hope the price will go up to maybe 3,300, but not much more higher. Again, if it goes up and then you're wrong, it goes to 40,000, then you can lose. So that trade is delta neutral by construction, but where it's located means it's positive delta. Because it's positive delta, the price is expected to go up. Because it's a put and a call, they maybe double their capital efficiency because both legs earn fees. And the way that options trading work, and actually even in TradFi or Panoptic, is that you are, as a trader, you are incentivized to sell straddles or strangles because the risk is only on one side. So what I mean by that is that if you trade a straddle, you have a put option and a call option. The put option has risks to the downside only. If the price goes down in the put option, you are exposed to risk, you lose. If it goes up, you have no risk. It's actually going to stabilize and you won't earn anything. Conversely, the call side has risk to the upside only and no risk to the downside. So in TradFi and in Panoptic, and maybe I'll end with this as a tip maybe for the more advanced traders. If I were a trader and you are too, you can choose different strategies, maybe bullish or bearish from the trade page. And if you're bullish, you can sell a put option. The risk is only on the downside. If you're bearish, maybe you sell only a call option and the risk is only on the upside and no risk to the downside. But if you sell both at the same time, the risk is also unidirectional. The risk of the put disappears on the way up. The risk of the call disappears on the way down. So even though it's two options, each of them controls a lot of capital, only one leg at a time is at risk. So you have half the risk for the same capital exposure. So in TradFi, you may be selling straddle and strangles instead of naked options, puts or calls. In Panoptic, it's also what I would advise people to do. You have a directional assumption. Maybe you're bullish, so you would sell that put option and it goes up with the price. But if you're not extremely bullish, but you're neutral to bullish, you can still sell a call against it as well. Get this call option for free, double the amount of capital you control for exactly the same risk. The counterpart is that if you're wrong and it does shoot up quite high, then you are more risk. So the key point is that not just the trade over trade, the direction and the fees you collect, that's the IV, but also the capital efficiency is very important. We haven't touched this yet with Rosely. This is me, if I did it, how I would do it. But because again, by building the interface, you draw on the best things out of the TradFi world. So in that specific case, piece of advice: creating delta neutral strategy like a straddle allows you to double dip on the capital efficiency without maybe compromising on your directional bias. You can still go up if you don't think it's going to go above 4,000. This is a great trade to do, and this is what the account did. So I think that's it. Back to this. This is a very fun way to even look at people, copy trade if you want, have different ways to kind of learn from other people's trading. And then, yeah, we look at the intern, we look at this one. Maybe we'll look at the other top 10 if once in a while. But if I did it, that one is number one for a reason. I think they know exactly what they're doing, and they're very good at it. So that's actually very, very interesting to see. All right, so there's one couple of comments, and I'll try to do this now. Stop sharing. You'll see my face here. All right. Couple of questions, and I'll end it here. This is on YouTube. I think the comments on Twitter are kind of broken, but hey, I just found you implemented on Unichain. Unfortunately, I wasn't there before for some time. Is it an implementation of L2 in Panoptic? Aside for sure, a bad question. So it's actually live on layer 2s. This is the exact same protocol that we have on mainnet, but now it's on Unichain. So everyone, and we got a lot of those questions about whether we're going to launch on layer 2. We are on layer 2s. Gas is not an issue. What we've seen in mainnet and that person probably spent $100, $200 worth of gas over the past few weeks. Here you can do all of these trades on layer 2s. Unichain first will go on all the other ones you know about. It's very straightforward now. We implemented the Unichain launch in 30 hours. It's going to take us 3 hours next time and 30 minutes after that. So overall, we do want to value retail investors. We can do it on layer 2s, and we can do it. You can do it now on Unichain, but also all the other ones. So that's a very good question. We're live on layer 2s. Another one. You guys made a breakthrough. Great stuff. Super smart. Thank you, Artem. This is again. We've solved options on chain. Again, we're doing it on mainnet. We're doing it in a way that is extremely difficult to do. We have this unique opportunity of doing it on mainnet because we leveraged Uniswap v3 and Uniswap v4 as an options clearinghouse. This is a 0-to-1 breakthrough in the world of options trading, perpetual options. It's the perp of options, but it's actually a new thing, so new that I have to spend several hours a week teaching you guys, teaching my team. But overall, again, if we have we have the knowledge, and again, I'm trading quite a bit too. I enjoy it a lot. I think on Unichain and layer 2 is going to be great for everyone, but then for the larger players, institutionals, those that are gas agnostic, having this work on mainnet where the bulk of the liquidity is definitely a big breakthrough. This is not something that you can easily do using an order book or club or the current way. Yeah, we did something very cool here. But yeah, I think that's it. So I'll end this here. This is great. Again, thanks for sticking around and hearing me ramble for a while. As always, I'm open to questions either on Discord or Twitter. Discord, I won't answer to DMs because it's very scammy, but you can add me in our Panoptic Discord group, or you can send me an email on Twitter. Very, very happy to answer any questions. This is what I want to have people do. Ask questions. We can go through it. Trading options, not for everyone, but we want to have this be kind of the where the professional retail users feel at home. I personally have moved on from buying hold. I'm only trading options on Panoptic, only trading options in TradFi, and then this is kind of what I want to have you guys know. It's not just perps and buy and hold. Options are extremely valuable also if you want to trade. So I think that's it. Unless there's any question on X or anywhere else, I think that's good. I'll log off, and thanks for showing up during President's Day. And I'll see you guys tomorrow. We have the research team presenting about the doom loops of Uniswap, and also on Wednesday we'll pick up with options hour, but also stop losing, start trading. All right, thanks very much, and